Good morning, you. How are you doing? I hope you're all well, wherever you're tuned in from. If this is your first time here, let us know it's your first time here. If you've been around, let us know that you are one of the lab technicians, that you are in our community. We really growing rather quickly here. We're up to almost 6,000 followers here in just a matter of a couple months. So I really want to shout out everybody that's here in chat, everybody that comes and tunes in every day, whether you're able to watch live and you're able to be active in the chat, or you watch at a later point. I want to make sure that you all engage with this stream, hit the like button, hit the subscribe button, ding that bell, but also when I ask questions, or if you have thoughts or coins that you're interested in, or potentially even sticking points, let us know in the comment section here. Definitely gonna, we're trying to make it a point between me and the mods that we answer any, meaningful questions that are there. So it's not just me breaking down charts. This stream is all about bridging that gap from beginner to pro. So whether you're any spot you are in your journey within crypto, let us know that everything is going okay. I'd say, okay. Sorry, I was getting some notifications. Let us know what you're thinking, what you're feeling. Let us know what coins you're interested in. Are you bullish? Are you in position? Are you still waiting for a push up and pullback? Let us know. Get involved. And with that being said, welcome to the show. My name is Kelly Kellam. That's where you can find me, at Kelly Kellam on my Twitter. We've got a lot to cover today, so we're just going to go ahead and jump in and get this going. So first things first, make sure, as I mentioned earlier, make sure you come here and you retweet this from the BitLab Academy page, which is at Academy BitLab. You can also see right over to my, I guess it's to my right, but where you see all the socials there on the bottom, which is essentially all right here. And make sure you're following all the socials and you're checking out bitlabacademy.com. We are it's been such a big process in the work the last 6 months or so, but we are tying up all the loose ends for these updates for BitLab Academy. Trading fundamentals, psychology of trading, candles, candle patterns, trading strategies, on-chain data course, psychology of trading. Have I said that yet? Self-custody. There's so much, all brand new filmed content done really well. We've got such a great team at the Hit Network and so many people involved in tying this all together. Special shout out to David, Ray, and Craig on the back end side of the team with the website and the Discord and all that kind of stuff. And that being said, mods, throw the link to the Discord, because we do have a free section in the Discord with the community in there as well. But also, when you are a member of BitLab Academy, not only do you have access to all the current courses, but you're going to have access to all the future courses. And all those people, and if you haven't yet, all the people that are members of BitLab Academy before we roll out these updates are going to be able to keep the current lower pricing. So I just want to shout that out. But let's go ahead and get back over here. Make sure you come here and retweet this tweet, because we draw on Fridays. We pick, first we have a spinny wheel Monday through Friday, whatever day it picks. Then we randomly select names from those people that have retweeted. This is you helping grow the community. It's you helping bring people into the BitLab community so they can get an understanding about what's going on with market dynamics, with what's going on with how to navigate the market, strategies, concepts, advanced alpha, broken down and thrown that rope back to beginners, so we can bring people along with the journey so that we can navigate the space profitably. So with that being said, I'm just going to shout back out to everybody here. Let me pull up. I don't need to pop out the chat here. I just want to see who's all in chat. My dad was the first one logged in today. So special shout out to Daddy-O. How you doing? In one actual shout out to you. Big love to the entire community that's here early. Start throwing in some of the coins you're interested in. Let me know what you're looking at, what you're DCAing in. If you see any particular setups, maybe I haven't noticed them yet, but a shout out right now, ex-Fedman. Thank you for the super chat. Said BitBoy Ben said, you do a great job. Been watching the show for about a month. Thanks for great info. You're making a difference. Thank you so much. I really appreciate hearing that. Sometimes it's difficult, although we do see people in chat talking to, right now, it looks like I'm talking to a wall because I've got my camera here, and it's just, so the more engaging you all are here in chat, it makes it a lot more exciting for me as well. But shout out to Mr. Alex Green, who's been doing so much work with me with the team as well, bringing all the new updates to BitLab Academy. Shout out to my dad. Shout out to King Peasant. We got Brad Guidell, Crimson Caravan Company, Alexander G, King Peasant. I think I already said Alexander G. I said again. We got a lot of people in here. Karen Swigart Harris. I just want to say how much I appreciate you all. So before we get going, hit that like button, hit that subscribe button, ding that bell. Let's go ahead and see where we're at right now. We got 84 people watching, only 31 likes. Let's get that up. Let's get over here. Let's come to the BitLab Academy page and retweet this. Let's get this up. Let's see if this has gone up at all. We're going to see. Okay, we got 9. Let's get this up. Let's get this out, because it's not just you helping the community, but you're being entered to win, whether it's a lifetime membership to the indicators or the courses, or 1 month or 2 month. We have a spinning wheel that determines what the prize is going to be, and it's all random, and it's based on, we draw from these people that retweet these tweets. So with that being said, what's going on with markets today? We've got all kind of stuff happening here. Did dominance do something, signaling maybe some liquidity flowing into altcoins? Well, we're going to talk about that. We definitely see, look at this, breaking out a major trend line, the altcoin market breaking out of this major downtrend. We've also got Bitcoin over here up in this bull flag sort of structure right at a key resistance. We've also got Cardano broke out of this downtrend. It looks like it's retesting it. We got GRT, I mean, broke very nicely out. It's pulling back. Is this going to be a retest? Is it going to continue up? Algorand. We've got an interesting structure set up here, but Algorand is one of those ISO 222 coins, excuse me, which is, for those that don't know, it's like, I think it's, let's actually look at which coins it is. ISO 222, which coins it is, crypto. Essentially what these are they're compliant coins that work with the standards of financial, the financial standards for cross-border remittance and international sort of transactions. And so some of these coins like Algorand, XRP, I can't even remember the list right now. Let's see. XLM, of course, IOTA, XBT. We've got, so XRP, XLM, IOTA, Algorand, Stellar, yeah. So Hedera, Quant, Cardano. So these are coins these are projects, protocols, ecosystems that are set up for potential, a little bit, I don't want to say less regulatory scrutiny, but they are working towards doing, they're working towards being integrated in not only the crypto system, but also the traditional finance system in terms of certain requirements that they have to meet for regulatory approval for certain. So these are going to be, this is going to be a great feather in the cap. So you want to pay attention to these types of coins. Moving on here, we're just going to go through a bunch of, we're going to be doing back and forth between TA and some news stories and some on-chain data. We're breaking all this down. So it's not just me telling you TA and what targets are. That's not what this channel is about. However, we do break down TA and we do pull up targets. But the point here is I don't want to just hand you a taco. I want to teach you how to make a taco. And that's what we're doing here. So shout out for tacos. Put taco in chat if you've ever learned anything on this channel. Put burrito in chat if you're here for the first time and you're looking to learn something, because we've got it for you. Now, we can see here also Avalanche had a breakout coming back for a retest. Gala, we're on very small time frames, but Gala, I think, is setting up for a very large move to the upside. Filecoin broke bullishly out of this bearish structure, this rising wedge, and then is now actually basically fake out to the upside, coming back down. Is this just a shakeout? We're going to talk about all this today. XRP looking like it's broken out of this descending channel here, which is a bullish structure. It's coming back down, as we can see right here. I like that. King Peasant, Taco Loco. Shout out to all the Taco Locos out there. Shout out to my boy Taco at Hit Network. You know why? This is what friends are for. This is why even channels like this or wherever you're gaining your knowledge. Taco saved me about $32,000 because he told me about this program. By the way, this is not a sponsorship whatsoever. He told me about this program with Coinbase called Coinbase One. And it reduces fees if you have a DCA structure set up, but also gives you up to $1 million account protection, as well as giving you, if you need customer support, you can call them and get them on the phone very easily. And I was very reluctant. I was like, you know what? It's $30 a month. I'll just sign up for it. And for those that have been watching for a while, may remember about, I guess about 2 months ago, I had 30,000. Somebody basically very coordinated attack got into my Coinbase account and stole $30,000 worth of altcoins. And while I was on the phone with the customer support representative, and I forgot I even had Coinbase One, she said, well, it looks like you're a good standing member of Coinbase One. So after we do an investigation, you should be covered. And you know what? I got 100% of it back, and the market had dropped in that time. So I ended up actually ahead on that. So this is just a shout out to risk management, really, and learning from each other and doing what we need to do to protect ourselves. So if there's anything, whether it's stop losses or taking life insurance or having your car insured, anything that you can do in life to hedge against disaster is a good thing to do. So let's go ahead and get into this. We got 159 people right now in the room and only 49 likes. Hit that like button, ding that bell, subscribe, join us. We've got so much stuff that we cover here on this channel. Now, what are we going to go through today? We're going to go through a lot. Now, first, let me just take a peek. Okay, so we got, yeah, everybody interact with that poll. Let me know. Are you a more conservative trader or heavily in Bitcoin and ETH? Is that like the large dominance of your portfolio, or is the majority of your portfolio alts, or do you have a pretty even mix between all of them? Let me know. I'm curious to see where people are at in terms of their strategy, and any interaction you all do here in chat, whether it's today or it's after the stream later on today, down below. Our team, we read these different comments and we read what's going on here. And based on y'all's interaction, it helps shape what we do on this channel so we can bring you the content that you want. So shout out to everybody watching over at Hit Network. If you have not yet, make sure you come over and you follow us over here, youtube.com/@BitLab Academy. You can see we're pushing up just shy of 6,000 people. So we got some stuff to talk about. Let's get into it. Today, the U.S. added 145,000 private sector jobs in March. Below, this is a very important thing right here, and we're going to talk about why. Why are we talking about jobs when we want to be talking about Bitcoin? Because this is going to affect what's happening in the broader markets and the monetary policy. And monetary policy shapes a huge portion of the narrative of risk on, risk off. And so we're going to get into all that. So below expectations of 210,000 jobs added to the private sector. So what does this mean? Well, we know that Jerome Powell has been, they've been trying to just fight this unyielding battle, and there's almost like a no-win scenario. Do they try to save the US dollar as the world is starting to pivot out of using US dollar for the world reserve currency to trade oil, to do trading other goods, with the BRICS nations? There's so much going on in that regard. And we talk about that a lot on the interview I did yesterday that is coming out Saturday. So I'm actually going to put up a second poll here in a little bit. I want to ask what time you all would prefer that to go live on Saturday. I'll post that poll here in a moment. You know what? We're going to go ahead and do that right now. In poll, let's see the data from that one. Okay, we got 41% are degens, all on the alt train. 30% diversified with mix of both. That's healthy. And then about 30% Bitcoin and ETH. So that's nice. So Saturday video, what time you prefer? Let's see. You all get to determine because you're here live in chat. 10 a.m. EDT as always, or 11 a.m. EDT as always. Or let's do an afternoon option, 3 p.m. ET. Let me know what you prefer that video to go out on Saturday. Now, Jerome Powell is fighting this. It's a no-win scenario. Is he trying to save the U.S. dollar? Is he trying to prevent inflation, which is, inflation at the end of the day affects everybody. There might be people making more, but I saw a recent statistic, and I believe it wholeheartedly. Making $100,000, and this isn't just inflation, this also has to do with New York City, but making $100,000 in New York is the equivalent of making about $35,000 in most other, smaller mid-sized cities in the rest of the country. So, and this is getting to be more the case in a lot of cities, whereas people might be making more money, but the cost of goods has gone up so much that they actually have they have less buying power, and we're printing off the charts over the last few years, and it's devalued, it's debased the value of our dollar. And this is one of the reasons why Bitcoin is such an important asset to be at minimum interested in, if not already starting to allocate some percentage of your portfolio to. And again, this is not financial advice. This is just looking at the devaluation of the dollar, whereas the value and supply, the value of Bitcoin is going up over time. The adoption of Bitcoin is going up over time, and the supply is programmatically going down over time. We can understand what's happening with Bitcoin. With the US dollar, there's no telling. We can also see, if we're talking about adoption going up in Bitcoin, and we're talking about the world reserve currency, a lot of countries out there are pivoting out of using the dollar, then we're seeing adoption go down on the US dollar while it's also being devalued. So just looking at the fundamentals between those two assets, Bitcoin clearly is a better option. Now, when we're talking about these 145,000 private sector jobs in March, which is below expectations, projected from economists, the reason why this is important is because as we're seeing some of the data, the CPI, Consumer Price Index, and the different economic data points that are showing disinflation is occurring, inflation starting to come down essentially. The Fed has still been, we just had a 25 basis point hike, and now we're looking at what are we going to do? Is the Fed going to pause or just keep doing 25 basis points? Are they going to just basically do a 0 basis point hike? Are they going to cut? All these things are in the consideration of investors right now, and so we need to pay attention to data like this, because the reason why I think April and early May, maybe into this the third week of May is such an important time frame. From now till then, about 7 weeks, it's such an important time right now to figure out how you want to position your portfolio, because we do see inflation coming down, and we're seeing that key number of the jobs, less available jobs, which is starting to get into that territory that Jerome Powell was looking for, because it's a good economic indicator that there's sufficient pressure on the market to start cutting jobs, to not having as much employment. Now, as dark as that sounds, the reason why that is something that is an important factor is because it is an economic sort of data point for economists to then forecast there's going to be less spending in markets. And if there's less spending in markets, then the capitalist nature of our economy will then force prices to come down. So this is how this is all tying together. However, there is a huge caveat with all this, because we're also seeing, as we brought this up over the last few days, we're also seeing that the OPEC, the OPEC alliance, Saudi Arabia and Iran and Russia, and there's a number of the major oil producers in the world are cutting the production of oil by about a third. Now, this is also in tandem with people pivoting out, countries, nations pivoting away from the US dollar. We're also seeing less US dollar on, basically on balance sheets of nations. There's a reduction in the holding and use case of the US dollar. And we can see that right here. This is a US dollar chart, the dollar index. And we see this huge, basically, think of this like, remember the 2017 bull market cycle in Bitcoin? We had this huge push up and then blow off top. That's essentially what's happened here with the US dollar. So if you think about this like a trader and stop thinking about US dollar as something that you spend every day, look at this like a trader. Do you want to invest in this sort of setup? No, this would be something that you would short. This would be something that you'd be projecting lower prices on. And the interesting thing is here, we can see there's a huge zone right here that's, I can see basically this zone right here. Let's go ahead and not make that green, because this is, we'll make this orange. We can see that once the dollar breaks this level, there's going to be some pivots along the way, essentially coming down to this zone right here, maybe coming up, retesting, and then very likely continuation down to this area here. So, this is a major drop, although it's only from $101 down to 96 or 92 in the 90s. this is, I mean, this is so much money because how much the US dollar index is worth and valued at because of how much currency is out there. Okay. Now, the reason why this is important is because when we see the dollar performing very well, we see risk assets performing very poorly. When we see the dollar coming down, we see assets, and this is not just Bitcoin and crypto. This is also traditional financial instruments as well. But as we see the job cuts, we're seeing job cuts, we're seeing less available employment, we're seeing all the market that's seeing disinflation, we're seeing all the things that Jerome Powell wanted. But the reason why I say 7 weeks is such an important time period to think about is that we get very delayed data. And this is also, I want you to know, this is also why Bitcoin and crypto and blockchain is so much better than the traditional finance system. We get delayed data from all the other financial institutions. With blockchain, we can peer into on-chain data and see all the information we want as fast as each block prints. Okay, with we're looking at these CPI readings and inflation data and employment data and all this stuff. And this is typically we're getting a report on a month or so previously. So as we're seeing all the economic markers we would want to see that is potentially bullish, we're seeing this in tandem with the cuts in oil production. Now, if there's cuts in oil production, what's that's going to do? That's going to drive prices of oil higher. This is why I was looking at the US dollar as we're talking about pivoting out of the US dollar, but we're interested, everybody in this channel is in, I'm nearly positive that 99 point, if there's 1,000 people here, then 999 of you are interested in Bitcoin and crypto. And so this is why I'm talking about these other traditional things, because this is going to have an impact on where our market goes this portion of the cycle, the rest of 2023. We're seeing the things that we want to have the Fed do things that will then shift bulls into gear in markets, not just Bitcoin and crypto, but traditional assets as well. But at the same time, we're seeing something that's going to drive inflation likely back up in some regard because oil prices are going higher. And that's one of the most important metrics in the economy because oil is among the largest drivers of the world economy. And so if people have to drive to work and they have to buy, gas to put in their car, then their cost of living is going up if gas prices go higher. If you're delivering chicken wings to a chicken restaurant, then you have to buy gas to do that. Cost of chicken wings go up. Supply logistics, this just affects every aspect of the world. And not only gas and vehicles, think about how many things utilize. Look on your desk right now. Look at your computer. Look at the things around you. About 95% of everything that is produced is using some form of petroleum product as well. So if we're seeing all the economic indicators that we want for the Fed to pivot, but we're also seeing something that's going to likely drive basically make the inflation data that is falling maybe stagnate or come back up, then this could have impacts on what we're doing with investing. So let's go ahead and continue on here. Let's move through some charts. I just want you to think about all these things when we're thinking about what's going on. And I'm just going to come back real quick. The reason why I say 7 weeks is because there's a regular saying, sell in May and walk away, buy in July and let it fly. But the sell in May, let's just take that out of it. Let's take that out of the equation. Let's just look at the data. If the economic indicators right now are suggesting that we could get some sort of dovish approach or market positive approach, whether it's in language or decision from the Fed and from the FOMC meeting, but then around the same time, we're going to get the CPI data from the previous month. And so right now, of course, let's think from where we're at now through the end of April, the middle of May, we get the CPI data from April, maybe into June, and then we start seeing costs going back up. That puts the Fed in a very precarious situation. And markets are going to be trying to price this in, and there's going to be some volatility around all this. And not only that, this could be something also that helps catalyze the notion that we are going to go into, the textbook definition of a recession. So there's some charts we can look at and there's some data we can look at to help prepare ourselves for what we want to do in this market. So let's go ahead. This is what you want. Hit that like button, hit that subscribe button, ding that bell, join us here in BitLab Academy. Now let's go ahead and go through some of this data. Now, we've already gone through this, but I want to point out something right now that is interesting to take consideration of. It's like market trade metrics here. Bitcoin's spot to derivatives trading volume ratio slides to lowest 11 months. So what is spot? What is derivatives? Spot means, for instance, say you're new to crypto, you go to Coinbase and you put in $100 and you buy at that moment $100 worth of Bitcoin. That's spot trading. You're trading one for one. Equal value. Derivatives trading is when somebody's taking, whether it's options, perpetual futures, margin trading. You're essentially putting down, let's say, $100, but you're taking a 5x position or a 10x position, or you're betting on something that's happening in the future. You're settling that trade at some future point, but you're trading it at an exponent of the trade collateral that you're putting in. So we're seeing the spot is dropping, okay? The spot is dropping while the derivatives are rising. So we can look at some of the data as what this means and how it can affect what's going on in the market. But I don't want to go through this whole article, but you can come and read it right here at CoinDesk. But these are things we need to pay attention to, because if there is a healthy spot, retail coming in and buying, without putting risk in the market, because if something's bought on spot, there's no liquidation for it. All derivatives have some sort of liquidation point, or at least pressures to get price to a certain level so that they can take the most advantage, or the market makers pushing price to a certain level to inflict the most pain. So having a lot of derivatives outweighing the spot action in a market can put the market in a precarious situation and cause massive swings and volatility in that market. So this is just something to pay attention to. We're seeing derivatives come in, which is a lot of higher speculation, some institutional, but it brings risk into the market. Now, coming over here, we can see Bitcoin whales. This is something that we need to pay attention to. Bitcoin whales push choreographed Bitcoin price as Ether nears $2,000. Okay, so what is this talking about? Well, we can see, and we talk about this in the BitLab Academy, by the way. We have in the trading fundamentals and the psychology of trading and the trading strategies, understanding order books, understanding where, essentially what we're seeing here on Binance Spot. Remember, we were talking about spot and derivatives. On Binance Spot, meaning people trading one for one, keep an eye on the $28,000 area. Those stacked buy walls will either support market buying here or will be pulled later. What the heck does this mean? Well, if we pull this up, what this is indicating, and I want you all to pay attention to this when you are trading on whatever exchange you trade on. We can see these are called order books. And what an order book is you can see people having limit orders in the market at different price levels, and you can see how much at each particular price level. So we're seeing this is essentially the volume comparatively to the volume around it at those different price levels. So this is a buy wall, this is a sell wall. Why do I say that? Because we see a large spike in the amount of interest at this price level for price to come down to buy. So some people will look at this blindly and say, okay, well, this means if this is a buy wall, that means price can't go below this. But you have to understand there are market makers in all markets, and there are systemic manipulations that happen by coordinated large different institutional investors, by different whales, meaning people with thousands of Bitcoin, institutions that have not only thousands of Bitcoin, but they can also place $100 million, $200 million, $500 million derivative, multiples on that, creating these buy walls. And this doesn't mean they have to buy here. They could place this here. They could place orders above and below, creating a range that Bitcoin or any asset trades in. Now, this is important to know because this is just a limit order. This may never get filled. This may be here to give people confidence in where the market is. And for if price comes down, I'm going to buy at this level also. But then as price nears that level, they can cancel these buy orders and this sell wall will evaporate. And then as this disappears, then price can just, because people, are putting buy orders there, that's giving liquidity for this, providing the opportunity for somebody, if the price gets down to those levels, for a market maker, somebody that has, there's so many people that are much smarter than us with much more money that can move these markets. So you've got to really pay attention to what your strategy is and stick to your strategy and have good risk management in place. I just want to point this out because this is an important consideration, and this is very important consideration. Now, when we come over here, we can also see that this is at odds, and this is why it's important to get multiple news sources and also multiple data points for your analysis of the market. Because what we can see here is Bitcoin shrimps, and I hope at least some of you are shrimps, having basically, we can see right here, having, I believe it's less than 1 Bitcoin in their wallet balance. So everybody in here should be a shrimp. You should have at least 0.01 Bitcoin in some wallet somewhere. But remember this first headline we got? Spot trading down, derivatives up. But then we come over here to this chart right here. Where were we at? Bitcoin shrimps, people under 1 Bitcoin, have been aggressively accumulating. So this is showing retail, very small retail interest at these levels. Now, this can be a good thing and a bad thing. There's two positions of thought here, and it has to do with market dynamics, and it has to do with something that I've talked about a lot on this channel. Make sure, again, come over here if you haven't yet to BitLab Academy, follow us at Academy BitLab, and come down here to today's daily post, retweet this. You'll be entered to win. We're drawing on Friday. A lot of different stuff we're giving up. But what I want to show here more specifically is this chart right here that I've brought up so many times. And this is what we need to understand. Remember, there's two considerations here. There's never ever just one market cycle. There are market cycles within market cycles. So you can have a macro market. You can have, say this is a monthly chart. You can have a macro market cycle, but even within this, you have a smaller time frame. This is a full cycle right here. Full cycle right here. This is the full cycle. This is a full cycle. This is a full cycle on smaller time frames. So that being said, I want you to consider that when we're looking at this chart right here. If this is hype buyers with no conviction buying, retail coming in and buying, giving weakness to a level, this could this is a more macro look at price action. This also provides weaker hands that with volatility, they're providing liquidity then for smarter traders or people that can move the markets to then sell out of those positions, and they're selling to other people that are willing to buy at that level. So they're selling, taking advantage of the drop and buying lower, while retail buys at the top and gets left holding the bag. So the reason why this is important to note is because this is why we need, every one of us, we need to have multiple data points that we utilize when we are going through the markets, whether it's technical indicators, fundamental data points, adoption rates, on-chain data. Build your basket of knowledge, build your basket of data, so that you're getting a full picture on the market. Because if this, in this case, this is on the macro, if retail's coming in, also signaled some weakness in the market and it's dropping, then we need to take note of that, because does that mean that's going to happen at this, essentially, this is the level that we're at now. Remember, this is something I posted back in, when did I post this? January 29th, 2023. So a few months now, and we have pushed up. This was a projected line. We've pushed up to this level, to this $28,000 to $30,000 level. And by the way, this orange line, this does not mean that we have to get rejected here to come back down here, but this would be very healthy. We very well could break through this and get up to these levels up here. This is just an estimation of how market cycles work. This could push up here, break down here to this golden pocket, or it could break higher. And it's all about where what's happening with all the monetary policy. So we have to be prepared. But the point here is that at these levels, these current levels that we're at right now, that we're pushing into, is, let's bring up Bitcoin to large. We're on the 3-day. Although this is a bullish formation, we have long flagpole, bull flag sort of setup here. There's two important considerations here. We see the retail's buying right now. And just on the pattern alone, we could see that this projected target would be broken out of this all the way up here into the $47,000 range. We can do more conservatively, basically $41,000 to $45,000 range. Am I going to trade that expecting that this is going to break and have the same move to the upside? Not particularly, no. Do I think we'll get there at some point? Yeah. Do I think it's going to be like Balaji thinks, where we're going to have, huge quantitative easing come out here in a very near term and Bitcoin's going to go to $1 million within 90 days? I don't believe that's going to happen. No. What I think is going to happen is we are going to get a push up from here. The higher likelihood is that we are going to get some push up into this region here in the 31 to 33, maybe $34,000 level. If we get a strong bullish impulse with some really good news, maybe up to this level, 34, 35, and then a test back breakdown here, shake a lot of people out. And they're going to panic sell. And then the people that are here on this channel and the people that are understanding the data that's presented to them and the data available to them, they're going to take advantage of this, take some profits, come back down, re-enter with more capital at a lower price, and exponentially make their asset, their portfolios larger because they're taking advantage of the market trends. Okay. And so what do we do here? Well, we have to take all this into consideration. So I just want to say good morning to everybody here. Just let me know where you're tuned in from. Is it morning where you're at, or is it night? This is why, because this is obviously streamed on the internet and people also watch at different times. This is why at the beginning of every stream I say good morning, good afternoon, good night, because I want to make sure everybody knows that one, I appreciate you being here, and two, that I think it's so phenomenal, how fast the internet has grown over the last 30 years, 25 years, and it's so amazing that we can be here together like this and learn and share our experiences and grow together. I just want to shout out there, just my little sappy moment. So shout out to everybody here in chat. Now, we want to take advantage of this, but we also want to understand that Bitcoin isn't the only asset in the crypto ecosystem. This is why today's thumbnail is bull setups everywhere. Well, does this mean that we just need to go all in long and have no risk management? No. This is showing that there is some technical setups, technical analysis setups, as well as data suggesting that there could be some very large moves coming for a number of different assets within the crypto ecosystem. So what are they? Well, let's talk about that. Well, first, we talked about Bitcoin, and we've talked about the flow of liquidity between the different assets within the crypto ecosystem. Bitcoin typically being among the largest first mover. And then as that sort of gains attention within the crypto ecosystem and the broader investing ecosystem, because now Bitcoin is on the global stage. It's talked about in government meetings on a daily basis now. It's on the news. It's on tickers on mainstream financial channels. So when Bitcoin starts pushing up, people start becoming aware of crypto again. And then as liquidity starts flowing into Bitcoin, as Bitcoin starts pushing up, then when it hits certain areas, for instance, as we're talking about like right here, where it's beating its head up against a wall, we have key resistance here from previous support. Then there's potential. We're seeing awareness of Bitcoin come in as we're starting to get back to levels that, back here, Bitcoin was dead. Oh my God, it's going to drop down to $3,000. And now look, we went from the lows, let's go to the measuring tool. We went from the lows all the way up to the highs here, up, near, 80%, 85%, depending on where you're measuring it from, because I'm zoomed out. We'll just round it to, I think it's closer to 70%, but because I'm zoomed out, I can't fine tune it in. But this is how it takes advantage of people. Max fear is the best opportunity. But right now we're having a lot of hope come into the market. And so because people are taking profits, we're seeing profit taking here. How do we know that? Because price action has stopped moving up. There's been selling here because people are looking at previous price action support. And this is now flipped to resistance. So if we do break through this wall, then one, this is signaling a lot of stronger stronger strength. Let me go ahead and revise my statement there, please, Yana. No, we're seeing strength come into the market and breaking key zones. So we can come over here. We've been talking about the dominance, but we can come over here and go to the total chart, not ODL, total. All right, we come to the total chart, and what we can see here, if we come out to the 3-day, is this is the total crypto market cap of everything: Bitcoin, Ethereum, every altcoin. We're seeing that this was in a macro downtrend, and we've seen that we've broken to the upside. So this is this falling wedge, this pattern here, which we have all these supports, multiple supports where price action is following this trend line, and then multiple resistances, and this is broken out. This is a bullish. We could have predicted this as being 70% likely to break out to the upside. And so this is why in this bear market, when everybody thinks it's dead, meanwhile, technical analysts are looking at this saying, okay, well, we're nearing the 65 to 70%, past almost to the 80% mark of, the length of this formation. Around this region is where most often breakouts happen. And if this is a bullish structure, as price action pushes up to this area, you start looking for other key technical indicators on your individual assets, like bullish divergences, like momentum starting to roll over using the MACD, or stochastics resetting on the large time frame down to the smaller time frame, or using aggregate professional indicators like we have with the BitLab trading stack that pulls together. I know between the 4 different indicators we have, each one of those, BitLab Market Intelligence aggregates like 10 different indicators into one. Significant movement has 4 different momentum indicators aggregated into one, and so on and so forth. So you're getting a very broad and incredibly detailed, in-depth aggregate algorithmic look into the strength of trends. And you can see strength coming in while price is pulling back here after we've already pushed up, and you're seeing bullish strength come in and volume come in. Then you can take advantage of this situation on whatever asset you're doing. But this is showing that there is bullishness coming into the market. Does this mean it's going to be up and away from here? Not necessarily. We very well could have a very, as Jordan Lindsay calls it, repair in the market, which is this coming down, shaking people out, and then launching from here. So we have to still practice risk management. But we're seeing right now, why I call this stream the bullish setups everywhere, is when we go through some of the data. This is I'm proud of this, so I have to say, this is my on-chain data chart, my metric that I created. It's the Look Node. People are hosting it here on their site. It's free. You can come over to looknode.com, come to market valuation, come down to Bitcoin cycle valuation, Bitcoin trend fib opportunity zone. This is using one of the most important metrics in the crypto ecosystem, and that is the realized price. Every one of these bands is a Fibonacci multiple extension or reduction, but it's a fib multiple of the realized price. And we've seen that this is over the course of the Bitcoin's life cycle. This not only has the realized price, it also has the aggregated short-term holder realized price and long-term holder realized price. So we can turn off a lot of these, and we can look at where we can look at just where is the this one? Yeah, we can look at just the realized prices. This is, of course, the red is this reddish line is I call it the trend signal line, but it really is the short-term holder realized price. And what we can see is anytime we've broken back above this has been an excellent gauge and also start of a strong bullish trend all the way until we broke it here, had a correction in the small bear trend. But once we got back above it, strong bull trend. Once we broke below it, resistance, resistance, resistance. Once we broke above it, look at this, carried the bull trend all the way to the upside. Once we broke below it, carried resisted any sort of bullish price action all the way down until, look at this, caught it right here. Even if you only use a short-term holder realized price, it would have given excellent entry, long-term position trade exits and entries. Now, would you have caught the top here to sell out? No, but you would have taken advantage of price from $10,000. Let's see, from about $12,000 all the way down to $4,000 when it crossed back above. That's a massive reduction in price that you could have taken advantage of. Now, we don't only use one signal, one metric, one indicator. So you could have made a much better position trade using this to look at where we're at, though. What we're seeing is we've broken back above this short-term holder realized price and bounced off of it. Now, if we look at the opportunity zones, which is the multiples of this center line here, which is a realized price, we can see that anytime that we are below the long-term holder realized price, which is this band here, and the realized price, excellent accumulation, excellent accumulation, excellent accumulation right after the FTX crash. So we are on trend. We are very on trend with what's going on with markets and where we're at. Now, when we look at the zones, we can see generational buy, which is, we hit this in both of the last, we hit this here in the 2011 market. We barely tapped it here in the 2015 market. We didn't get down to the generational buy, but we did get down to the, here we go. The bear exhaustion buy zone. Look at this right here in the 2018 market, dipped below, basically between this region. These bands should be looked at as regions, not the exact dollar amount. We can see the price once it broke below the bear exhaustion zone. It's essentially highlighting that this is an excellent buy zone. This came down and tapped it on the global economic shutdown in March of 2020. Right here, we basically rode down this, when we bounced right here, pushed back up, but we're still getting rejected off the short-term holder realized price. So although this came down into the buy zone region, this did not break through it. So this would have told me that we did not have the bear exhaustion yet. But then here, we came down and basically tapped this, held on this level, and then once we bounced, we broke above the short-term holder realized price. Now, what's directly above us? Well, interestingly, I'm glad you asked. We can see the bull floor band, which can also be like a bear, actually bull, I don't want to do that. Yeah. Which can also be a good marker of more conservatively. We've had all this accumulation, but what I want to point out here is we have two different opportunities. I mean, there's going to be multiple different possibilities, but there's two very likely scenarios that are going to play out going out through 2023. And that is, do we have this sort of bull run like this, where we have this all the way down from, the $3,500, $3,700 range, all the way up to about 14,000, then back down and then onto continuation after the halving into a parabolic uptrend? Or are we going to have something like this where we have this long accumulation zone, look at this, and a push up? And this is where I'm kind of leaning towards. I'm thinking we're looking a little bit more like 2015 than 2019. And this is because we're having a lot of economic stifling, bearish sort of pressures on the market because of geopolitics, because of banking crisis, because of, different governments, especially the US, shutting down on-ramps, on and off ramps to crypto. But there's still a lot of interest for people on the sidelines. There's billions of dollars in stablecoins sitting on the sideline. There still are some on-ramps and off-ramps. But what I'm seeing here is we see the price action push up, and you see this purple line here. Excuse me. This is pushing up and getting rejected at the bull floor band. So what does this mean? This also can be like a accumulation zone sort of ceiling. And once we finally break above this, and it's also breaking above, it's still holding above the short-term holder realized price. This was the conservative start for a very strong bullish trend. And what we're seeing right now is, we can see if we zoom in, we're seeing a similar sort of setup where we're kind of getting rejected. We're rolling over before we even hit this level. If we put the mouse right here, we can see that bull floor band is right about $32,000. This is that same area we saw in technical analysis, was an area that we needed to look at. So everybody just take a break real quick. We got to do this. My back is hurting. Everybody should do this while we're sitting in our chairs. Oh, you got to move around. Yeah, wiggle your back. Oh, loosen up those muscles. We got to treat our bodies right. We got to make sure that we're not just locked into a computer screen all the time. Now, okay, coming back here, hit that like button if you hadn't yet. Hit that subscribe button, ding that bell, and share something in the chat. Now, do you think in the chat, are you more of the opinion that we are going to have this sort of massive push up and then, cool off? I'm talking like this was a massive push up. or do you think it's going to be more like the 2015 cycle? Which sort of likelihood do you think is most likely for 2023? As we remember, back to what I was talking about earlier, I was given this sort of 7-week sort of timeline for essentially what I'm thinking is going to be very strong bullish behavior over the next month, especially for altcoins, catching up to a lot of the Bitcoin gains, but also because of the nature of this positive sort of, it's negative economic news, but the negative economic news is going to likely encourage positively effective monetary policy decision, or at least stances in the talking points, which can have, bullish impacts on the markets. But then because of all the oil stuff, then this very likely could lead us into a potential recession later in the year. So I am thinking we are going to get a lot of bullishness, but I do think there's going to be some selling off of that bullishness and a lot of profit taking for people looking forward in the markets as to what's happening with these traditional assets. If we come back over here, we can see NASDAQ forming a rising wedge. This is a bearish structure. So this this very well could fake everybody out and come up because of this same narrative that I was just talking about. And then as the recession sort of kicks in, as the oil prices gets higher, as inflation may start coming back up, basically rolling over. We're seeing NASDAQ pushed a lot higher. Well, this is also in inverse to the NASDAQ. This is the industrial average. If we're seeing oil prices raise higher, this is sort of a false, I don't want to call it a false flag on the economic health, but we're seeing this rise because of these oil, large in part because of what's happening with OPEC. But we got a lot of other stuff to talk about. We got a lot of charts to go through. What else was it? Well, first off, let's look at this. Total number of Bitcoin addresses just continuing rising. This is just such a positive indicator. But I wanted to look at exchange net position change. We talked about this the other day. Bitcoin exchange net position change. Let me zoom in here. We're seeing a lot of reduction in the coins going onto exchange. Is this setting up for another? I mean, at least it's going to, as coins come off of exchange, that also increases the sort of supply, illiquid supply. And illiquid supply essentially means not readily available on exchange to trade. So the more illiquid supply in an asset there is, the less supply there is available to trade, meaning there's easier movements to be made within the space. Price action can move more volatilely. And you could have explosive price action if there's nothing to so say there's 1,000 diamonds, down all the vendors on your street, and every vendor has, every vendor has 100 diamonds, but then one vendor or two vendors buys all the diamonds from everybody else. And then basically is only showing that there's 5 diamonds a day that are available to be sold. It's basically because of that illiquid supply and because of the available supply that would drive the value up of that asset. And essentially that's really what happens in the diamond market. Look into it a little bit with like De Beers and other things like that. But looking at this metric helps give us that sort of indication of what's going on. But we can also look at this chart from Trader Tardigrade. We could see these patterns where we're having support, getting rejected, having your bear market, support, accumulation, disbelief, continue into the period. And then after the strength comes in and then people can't believe we're getting to these levels. The news media starts coming out, the stories, you individually, all of you start making a lot of money because you made smart trade decisions. So your friends and family, this natural sort of viral sort of word of mouth, how it's impacting your life. And then you get this parabolic increase and then the sell off. And then the same thing happens. Push up, pull back, push up, distribution, pull back. And we're in that sort of phase right now. Are we going to get this push up all the way to here and then back down? We don't know. This is why we need to pay attention to the markets daily. But we can also look to this chart right here. We are setting up. We broke out of this zone. Once we broke out of this zone, we can also see previous all-time high, this resistance. We broke not only above this resistance, but above this, I don't know if this is a GMMA indicator. But once we broke above all the red moving averages on this indicator, it became support all the way to the upside. We have this downtrend resistance. Once we broke above this, of course, we had a little bit of consolidation as we see right here. And then once we broke above that, strong movement. And we're kind of in the same position right now. So we've got a lot of things setting up. And then the last thing I'll show here, market stages, plan B is showing that, we have this red market stage, very overheated, and then as this cools off, we get into the strong accumulation zone. Every dot is a monthly, same thing, sell off, accumulation, and the strength is starting to come in. Very overheated as retail is coming in, and then sell off. Same thing over and over. So we're kind of getting into the zone right now. What is going to happen? Well, let's go ahead and break these things down. When do I sell, says Granny Gardens? Well, this comes back to, and this is important for everybody. I want you all to pay attention to this. When you buy and when you sell is up to you. Is that a cop-out? No. It's important to understand that you know what your time horizon is. You understand and you're comfortable with what your trading strategy is. And if you're not fully comfortable with it yet, that's okay. It's not the end of the world. You need to practice, even if you're trading with fake money on a demo account somewhere and you're doing fake trades, but you're going through the processes like over and over. And then you get into trading, even it's say $100, and you're trading, let's say on a 15-minute chart, trying to see setups, but you don't throw $10,000 in or $100,000 in and just try to start, basically day trading, because you're going to lose money. You need to have a strategy in place. So what I would advise you to do, of course, is tune into here as much as possible. Get involved with BitLab Academy. We break all this stuff down. We're going to have a lot of free content in there as well as the paid content. And we also have all these opportunities here with all the giveaways that we do, with, coming over here to the BitLab Academy, page, and retweeting this, whether you're watching this live now or later on this afternoon. All these are aggregated all the way through Friday. And then even the ones on Friday at the end of the show, we pick different winners. So we have a lot of opportunities. We want to make sure people can learn how to navigate this market. But what I want you to have is a strategy. And that's what we're going to talk about here. What we can do, we can use basic strategy, which is something like, using a MACD, RSI, and stochastics. Okay. And then you can look at your price levels. And we can come down here to the, let's say, for instance, the daily. And we can see right here that we have price action trying to push up. And we're seeing a little bit of weakness here as the stochastics come down, the RSI is coming down. But this isn't necessarily the end of the world, because this also could come down and these can reset, which could be a launching point. But what I want you to look for is when we have key levels, for instance, if your time horizon is 3 years, or between now and 2025, and you're not actively trading on a daily basis, and you don't have the ability to look at the charts on a daily basis, then I'd really just advise you to be more, and actually I can't advise you. I would advise a strategy that works for people. Strategies that people can use are identifying, like when we are over here looking at these good, healthy accumulation zones, then you can identify these healthy accumulation zones. And then when you get up, for instance, let's see, where's the overheated take profit zone? When we get into these zones where price action, you could just be patient, and you have to be resilient if this is the case. If you're, buying in these zones and price comes up and then starts coming down like this, and then you sell because this comes back down here. No, in reality, look, the price action came back down into the accumulation zone. So this wouldn't be a sell signal. This would have been an add more to your position signal. And then once this comes up and it breaks this, you see this, this take profit zone, you see it flashing on the screen. When this gets into these zones, although once this taps that zone, although price pulls back and then moves higher, for a non-advanced trader, you're taking advantage of buying down here at $3,500 and then adding more here again at that $3,700. And then the price up here at this point would have been, $38,000. So that's enough. You don't need to be greedy. So what you can do is use basic strategy, and we're going to have a lot of basic strategy stuff in the BitLab Academy, as well as different advanced strategies. But what we want to do is we want to look to Bitcoin right here, where we have this macro resistance. If price action, if it, and this is why I can't answer your question, Granny's Garden, is because I don't know when you bought, and I'm not ever going to tell somebody when to buy or sell. I'm going to show you strategies about how to do it. But if we're seeing here, if you bought somewhere here, then I mean, for me, I wouldn't be selling at any point unless even if we broke below this level, I would be adding positions on this because I see, you might not, because I see this regularity of trend that we were talking about. Where is that chart from? This regularity of trend. So if we are getting down to those levels, I'm adding to my position because I'm a longer term investor. But as we look to the charts, as we look to what's going on these charts right here, what I'm looking at is, let's actually come over to the, not Binance, Bitstamp. Here we go. Let's mute the, okay. So let's go to BitLab Trading Stack. Let's mute this. What I want to see is, if I was trying to trade this position from here to here, is once price action starts getting up at these levels, and I'm seeing on any, and you can come over to look into bitcoin.com, for instance, look to bitcoin.com. Keep dropping my headphones. Come over to charts, and you could see, let's see, addresses with, let's say 100 Bitcoin. You can look at these, that's not actually what I want to see. Well, one, you can do the exchange net position change, but you can also look at, where is the, yeah. We can look at the 1 year HODL wave. If there's a sudden shift in, like, long-term holders are starting to sell, for instance, right here, you see this right here, this starts rolling over. So that's one indication there. Now this is going to start rolling over, but a better look here would be, I'm gonna go to look node. You come to look node, come over here. I can come to my favorites. Why is this not? Oh, I gotta log in. Okay. Now this is favorites. Now we can come over here, addresses with over 10,000. You see right here, this strong rejection here coming off. Also right here, address over 10,000. They started offloading right here, coming into this push up. So this was being offloaded to retail buying. Looking at, where we at? Long-term holder supply. So we can see, that's not what I want to look at. Long-term holder position change, this is what it is. So we can see right here. So this is a lot of accumulation. You see this right here? This is a metric you could definitely watch. And as soon as this flips right here, this is them reducing their positions. So if long-term holders, this is important for this is why I think on-chain is so important, because it gives you a mind into the smart investor and the investors that lose money, we should call them divestors. So the long-term, the smart money is, you see this basically strong accumulation starting to accumulate, and they're accumulating into this push up, and then you start see them reducing position right here. So this is the red, the long-term holders reducing position, meaning the short-term holders, the retail. This is about like the story we mentioned earlier. This is why I'm a little concerned that retail is, there's a lot of shrimps buying right now, which is good, but we want to see it amongst long-term holders and retail for it to be a healthy move up. And right here, we're seeing, this is back in that 2019 push up. We're seeing them get out of their positions and sell to retail. Now, similarly, they're reducing their positions. Now, when we look at where we're at right now, we're seeing, look at this, long-term holder position change. We're seeing a lot of weakness at this level. So while we may get a push up, I still think we have a strong sell-off position. So you want to have healthy risk management as to what's happening, because we're seeing long-term holders reduce their positions right now, where we can see, let's see, short-term holder. We're seeing the short-term holders position change. The short-term holder is increasing their position right here. Now, one of the caveats with this, and this is why technical analysis is so nuanced, is that some of this data, if a short-term holder is essentially any coin that's bought, especially but if it's into a wallet that's always trading and buying and selling, then it's going to be designated as short-term holder. But then more broadly, coins held less than 155 days. So if these coins that are bought right here, by the way, and the price holds, for 3 months, 4 months, then this will start reducing, and the long-term holder supply will go up, because those coins will have matriculated into being long-term held coins. Because I think Glassnode is the one that primarily did the study. It might have been somebody else, so I apologize if I'm misquoting, but that once coins are held past 155 days throughout any sort of price action, they're statistically less likely to sell in the face of small volatility. So it essentially adds strength to the market. The more long-term holders you have, the more strength you have in the market. But let's go ahead right now. Everybody spam the chat. Or put in the comments down below. Give me some coins. I know I got some right over here already in the chat. We're gonna do rapid fire. We're gonna be going through a lot of coins right now. We're gonna be showing some of the setups that are present and why I think right now, although we're seeing a lot of short-term holders and weaker hands buying these levels of Bitcoin might be reversing soon. We're already seeing a little bit of a setup. We're seeing a little bit of a setup right here. If we look at the Bitcoin dominance, we see this range right here. And what am I seeing right here? This is the thing that is going to be loading up those setups for altcoins to run. So even if there's any weakness that comes to Bitcoin right now, the fact that the dominance, this is the key factor. The dominance in Bitcoin is may potentially be coming down. Whether this pullback is like this, or maybe it's further down, whatever it is, any pullback here is an indication that altcoin markets are outperforming Bitcoin. So while Bitcoin may still have a push up to $32,000, $34,000, it's looking like altcoins are about to run. So let's go ahead and look at what this means. We've already kind of hinted at a bunch of them, but we can look at some of the things in the market right now. Look at this. We are getting a little bit of a pullback. Now, does a pullback mean everything's over? No, it does not. So we're looking here on the 2 hour. Let's go to the 4 hour, get a broader view, put it on auto. So we've had this sort of channel that we've been trading in. We have this resistance right here. We're looking at Cardano. We are getting a bit of a rejection. Let's pull up our other momentum indicators. We did have the overheated zone. We see this right here, this red wave. We were a little bit overheated. Excuse me, I have to hiccup. We also had a divergence in money flow, a bearish divergence, meaning there's less money coming in than necessary to support the price action at this level, while we also had a bearish divergence in hidden volume, and the relative extrema was looking like, look at this, showing that this was bearish pressure loading to the downside with the slingshot, these bars sticking out of this aggregate momentum wave. We see the momentum wave also aiming to the downside here with this basically bearish slingshot to the downside. And where are we getting at this sort of resistance level, which this is kind of an ugly line here. We can do it more appropriately like that, because we have these touches, we have this touch, rejecting here, but it's finding support. So what does this mean? Well, when we let's look at this on let's look at this on Bitcoin pairs, 88 Bitcoin. Well, we look at it like this, we're seeing option T, Alt T for PC is your immediate trend line. We are seeing, it's looking like Bitcoin, Cardano to Bitcoin. I didn't notice this before. This is why we have to do these things together. This is finding support here. And this is also the relative extrema is pushing to the downside, showing that any sort of bearish pressures here. There's more underlying bullish pressures, but the key consideration here with this is if we do the measure move, and this is Cardano to Bitcoin. So we've got about a 5% move before we have resistance. And there is one little bit of concern here is that this is a rising wedge. So Cardano, and I hadn't noticed this before, so I'm glad we looked at this. We got to keep our eyes on this. This does not mean that Cardano is going to, potentially only go up 5% against Bitcoin and then break down. It very well could break out to the upside, but especially if the dominance is falling and the altcoin market is kicked into gear. But we have to take note of this. We need to be aware of this situation. So that's what it's looking like for Cardano right now. If we come over to, we need to look at Ethereum. Of course, we need to look at Ethereum. The Shanghai update is coming very soon, about 8 days from now or something like that. I think it's on the 12th. I'm not sure, but we have this kind of, as I've mentioned, ugly inverse head and shoulders, but it's starting to not look like that anymore because we actually have a left shoulder. We have this head, but this is more of accumulation right here at hugging this trend line. And we're looking like we're attempting a breakout of this zone right here on Ethereum, which is part of the reason why I think the altcoins are getting somewhat kicked into gear. But we have to note here, we have the red wave here showing that the aggregate sort of combination of various different momentum indicators that help you signal trend cycle tops or trend cycle bottoms. And in this case, we're looking at a smaller time frame, 4 hours. This is looking a little bit overheated. Does this mean it's going to absolutely have to reverse? No, but it is showing that there's not as much room to run potentially unless something kicks it into gear. And within this, we're also seeing a bearish momentum divergence here. And so we can come down to a smaller time frame, look at the 2 hour. Now, key thing here, let's notice this. This has broken out of this trend line. So is this going to come out and find support on this EMA ribbon on the BitLab Market Intelligence, but also on this trend support? Is it going to flip this strong resistance to support? In which case, if this were to happen, meaning if this were to come down like this and then launch off right there, that would be a very clear sign that there's going to be a lot of strength coming into the altcoin market. And then the trickle down effect happens with a lot of the other altcoins. So now we can, let's actually just keep it in this window. We can go through, I'm just going to go down the list. This is no preference. GRT, we see rejection here, high volume at this area as well. So it makes sense. So option T, come down here and look at this. This is the option F, I should have said. Option F or Alt F. It gives you your quick key for Fibonacci. On this move right here, look at this. Price action pushes up to the point of control on the volume, which is this red line that's sticking out of the volume right here. And then it gets rejected right here at the golden pocket. So it looks like there's a little bit of resetting to be done with this is an old chart too. I don't even remember when I did all this TA, but we can kind of clean it up. But what we can see here with all this is it looks like there is a bit of a structure here. Option T. We can see that there's a bit of a symmetrical triangle here. And this is, I mean, if we look at this on the daily, let's look at this on the daily. I mean, there's plenty of room to run once it gets up to the upside. Next target above it is, I mean, even looking at the daily, 16%, previous high, 58%. The next low right here, 128%. The next high, 271%. Back to all-time high, 2,000%. This is GRT, the graph. The protocol looking to index all the different blockchains out there, to index the data on them, make them the information easily accessible, which is similar to essentially what Google and Yahoo does with browser search history, browser indexing of data online. Now let's continue on. Let's go to Algo. Okay, we have this key trend line right here. Let's go ahead and delete this fib. Let's go ahead and look at this. We have this key trend line. We are hugging it. I mean, the bears are trying. The bears are trying, but the bears ain't making it happen as it stands. But look at all this. Look at this huge, this right here. We can see that if we zoom in on this, we can see this momentum wave. This wave is an aggregate momentum wave. I want to reinforce that to people. They're not using it as such. You can see this, the healthy momentum wave. This just sharply came to the upside. We had this huge sort of unhealthiness of bearish pressures to the downside, and the momentum wave also shifted to the upside. And we can see that right here. Look at this. Bam. Now, as we've come down, we have this reg wave right here as Extrema stuck out, and we got rejected at the resistance line. Now, where we're at right now is we kind of had the blue wave here, kind of weak because we didn't have any of our other signals. But let's turn on our divergences. Okay. And we can see that we're kind of coming into a decision area as dominance is falling down. So this is giving a little incentive or a little bit of a directional bias, at least to me, about the likelihood. Could this break down and then reverse back to the upside? Sure. Could this break up, reverse back to the downside? Sure. But because of all the liquidity that's poured into Bitcoin recently and the pause that it's been taking, and we're seeing this setup and the dominance is falling, if Ethereum is about to run, then very quickly after, it's as we've seen in the past, then these other altcoins that are in the top of the coin market cap, and we see how we use a variety of tools. This is the order of how large each asset class is. We could tell by market cap, and we can see Ethereum. Once this starts to run, this takes up what is it? ETH dominance is nearly 19.2% of the entire crypto ecosystem. Of the value of the entire ecosystem is Ethereum. So if this starts running, Bitcoin already showed some, gave some thumbs up of approval showing there's risk coming back in the market. Now Ethereum is setting up for a huge upgrade. Shanghai, there's a lot of news narrative around this. If there's positive movement with Ethereum, then that is a further support, further feather in the cap of likely upside for other assets. And then we can come down the list and we'll see things pop, basically popcorn effect. And we just saw also Dogecoin kind of led the pack. Was it a technical thing? I don't particularly think it was just technical. Twitter changed their profile, changed their logo on their website to Doge, and we saw a huge spike. But this also sort of kicks the gears and helps move things along. So we can continue to look at these different assets. We see what am I trying to say? But Bitcoin dominance total. Let's come back to total 3. We see this. Remember, we have this inverse head and shoulders right here. We've already attempted this breakout, but it's not quite there yet. We're looking at the 3-day. We haven't closed. If we can close this in one day in 9 hours, we close above this, that will be very good. If we look at the daily, we have closed above this, but very slightly, and we're seeing a lot of wicks both directions. So we're seeing a little bit of indecision here. So this is very pivotal. We still could have a rejection, so have tight stops in place. Now let's continue on. Algo, as it stands right now, if you were looking to trade this long, I would not just front run this here. The way I would look at this is looking for the breakout. Bye bye, baby. Have a nice walk. Look for the breakouts from here, and then we ride the breakout conservatively to once this breaks out, retest this, and then continues higher. Once it breaks that previous high, and you come over here, you can use your risk management tools. You can put your entry, in here and be very conservative because things are going to be shaken out here. There's going to be a lot of shaking about where price action is going. And what you can do is you have your ultimate goal for the majority. We talked about this the other day, I think 2 days ago, option F. We could pull our fib here. And so we can take a little bit of profits off the table at the golden pocket, take a little bit more off the table at the 786. And you can always reevaluate your momentum along the way. And I'm going to kind of put this there. This is spot trading, by the way. You would not do a 5% stop loss on a leverage trade, just so you know. Oh, man, my back is hurting today, everybody. Oh, gotta shake it about. But the point is entering and then taking some profits, because remember, as much as we want to buy things and just hope they're just going to go up into the moon, the truth is, looking at previous cycles, we have push-ups. Look at this right here. Bitcoin price 275 down and into the hundreds. I saw it somewhere there. Push up from here to 230 up to 455, and then back down into the 300s. That's a, that's 30% drop here from 3,600 up to, $14,000. And then down, let's say we didn't have this sell off right here, but this down all the way to $7,000. So 50% drop. So there's volatility to be had going into this next halving, and it's going to affect not just Bitcoin, it's going to affect the entire crypto ecosystem. So if you are going to take entries, then take some profits along the way, leaving some in there, so you can, if there's a large push up, there's a large push up on any of the assets that you're trading, then you, as that then finds a correction on that correction, 15, 20% pullback, whatever your strategy is, then you can redeploy capital. That's free capital because it's capital that you made from profits on the way up. And as price drops, you're able to take advantage of stuff at a better price level. So let's go ahead and continue moving through. I see we got we just did VET the other day. Let's do let's do Ajax. I don't think I've done Ajax on this. Singularity.net, I believe, is what this is. Look at this. Looks like a heartbeat. So let me see if there's another exchange that has a longer range. Yeah. Okay. Let's go 3 days. Okay. Here we go. So this is going to be an interesting chart because right here, is it just me? How old is? Sometimes if you don't know, you got to look things up, Okay, let's look all. So this does have a longer, let's come here to, by the way, this is how you can, if you're not using CoinMarketCap or CoinGecko, just at a basic level for beginners, you can come here and look up basic information about a token, see, what the market cap is, what the circulating supply is. So, okay, there's 40 cents, but it also has 1.2 billion Ajax tokens, Singularity Net tokens. You can come here to markets and you can see every different exchange that it's traded on. Now, does anybody know the exchange that it was traded on the longest? I don't know, but what my point is, I'm not getting a lot of data here, but we can just look at it as this chart is. This level here, previous all-time high on this chart. I know that there's a larger chart for this, but I don't want to spend time looking for it. This has made, an exponential move from the bottom all the way to this top, 1,500% move. Do you want to get into it now? Well, who's to say? Because AI is a huge narrative right now in all the different markets this week and not this week, this last month or two. And there's likely going to be more development. But does that mean that do you want to buy something when it's up 1,500%? Well, first off, let's look. The high here is already dropped 55%. So maybe there's an opportunity here. If we look at this on the weekly, we could see this is very overheated. But because this is a narrative coin, there very well could be room to go. Is now the time to get into it? I don't know. Because this is a narrative coin, and there's a lot of partnerships happening right now with a lot of different AI projects. So that could give incentive. If this loses this level, though, I would rather be buying, somewhere option J, here, which would be another 40%, 44% to the downside. Why here? Let me actually zoom out here. Let me get more clarity. 8 hours. Mute. Because look at this volume gap, giant volume gap, because price moved very quickly. So I would like, because I don't hold any AGIX. I would like this to lose this level, bounce here, trap people, come back down. This is, the markets are a monster. They eat people alive. And in order for you to get a good entry, that means other people took bad losses. And I don't want any of you to be those people that take bad losses. Everybody has an opportunity to navigate these things safely if you're patient. And rather than just buying this because it's going up, allow this chart formation to do one of two things.
there's a couple of different opportunities here. I'm going to just look at some levels. If this loses this level, I wouldn't just put a buy order here, but I would definitely be looking at what the momentum and what the narrative is if price action came back down here, because this isn't, like I said, this is another 40% or more move down to this area. That's a better opportunity. So that's what I would be looking at. And on the 8-hour chart, we are looking blue for somebody that's swing trader. And this is a different discussion. You have to understand, everybody has a different time horizon. I am looking, my strategy, just so you know, my strategy is right now looking at these markets. Where the heck is that? I'm looking at trying to take advantage of this macro position, and I'm loading up on stuff. I'm doing very small swing trades here and there, but 99% of the stuff I'm doing is I'm finding opportunities to get into position, and for the most part, ride up this 2023 wave, exit a good portion of my portfolio when we drop before the halving towards the end of the year in the recession, when there's negative pressures on the market, re-enter the majority of my position and take advantage of that. So that's my strategy. If somebody's scalping and swing trading, then we can also see right here, we can see from here to here. I mean, that's a 24% move within this symmetrical triangle / bull flag, if you want to call it that, but I'll look at more like a symmetrical triangle. And in this case, okay, we look at this on the 4-hour. Let's come down to the 1 hour. If we were looking at it like a swing trader, and we could see that on the 1 hour, okay, we got bullish divergences. Let's go to auto. We got bullish divergences here. The relative extrema we see right here is showing that there is unhealthy bearish attempts, and there may be some underlying bullish pressure here, but this momentum wave is still angled to the downside. So what I'd like to see, we do have 3 bullish divergences. This is on the 1 hour chart. We came into support. This is still, the relative extrema is sticking out. We're not getting a blue wave here. The blue wave would indicate that the momentum indicators are showing across the board, not just one, but multiple, that we are undervalued, very undervalued. So, but this is looking at the 1 hour chart. And this is, by the way, this is for somebody that has a swing trading strategy and they have their target set. If you were to enter here, that you're going to take some profits, between a little bit between here and the upside resistance that we can see up here. But that's a 23% move on spot, not even using, and I don't recommend using leverage for anybody that does not have years of experience and does not understand the market dynamics. Now, if we come down here to the 24-minute, let's see if there's a little bit of a different story brewing. Okay, on the 24-minute, little deeper resolution, we have had the blue undervalued levels, and we're seeing this relative extrema was leading into this, while also bullish divergence coming in on the hidden volume. So there's a large opportunity brewing for somebody that is a scalp trader. Let's come back out to the 4 hour so we can see the chart more clearly, to take advantage of this coming to the upside. The only caveat with all this is looking at the context of this structure. We also have this downtrend resistance right here that this is tightly winding into, and it's looking like there's a little bit of indecision on this. So yeah, I mean, this is a harder one for me to, because we look right here, the price action is hugging this zone, which gives me an indication, excuse me, that with any sort of negative moves in the market, this likely could also have a position trade down to this support line down here, which is, another 15% down. So everything right now is perceived with caution. I mean, looking right here at the relative extrema, sticking way out and angled to the downside. So that's what I'm seeing. There's a little bit of indecision, and this is, it's a smaller token. So one of the things I did want to show, let's pull up Phantom. I know Phantom was kind of lagging behind a little bit of the other coins. So let's come here. Let's do option T, get our trend line, come out like this. Look at that. Phantom was attempting a breakout. Now coming here, attempting a breakout. This is on a 4 hour. We got the blue wave right here following the bullish div, and the relative extreme was sticking out. So that kind of gave us our signals that kind of lined up, boom, boom, boom. And then you could have taken that for a very small scalp trade, about 7%. But now we're getting on this is on the 4-hour bearish divergences, a little bit of a correction here. What's going on with the Bitcoin right now? Is there, let's see, let's go down to the 1-hour auto. So we're getting a little bit of a pullback. Okay. So you're seeing right now that there's the markets right now are option T. The markets right now are kind of, they're fighting this zone right here, this resistance above and this zone right here. If this loses this level, then likely test to the downside. We need to be having heavy risk management on everything we're doing. But the way where we're sitting within the trends of the market, between these different assets and seeing market dominance, seeing the Bitcoin dominance starting to fall. There's setups between these various different altcoins. We're seeing XRP also broke out of its downward. Come on, you can. There we go. This downward channel. Is this going to be a retest or continuation down? We don't know, but we are setting up in terms of the macro picture across the board for some incredibly bullish behavior to come. But as it stands right now, the market is going to do everything it can to shake people out in both directions. We saw it just today. Earlier, I remember looking at the Bitcoin chart. So I want you to be prepared for this. I remember looking at the Bitcoin chart. Let's come down. Let's come to the 2-hour. Look at this. We swing to the upside, swing to the downside, break this trend, come back up, push to the, it's doing everything it can. Let's come down to the 30-minute. We're just seeing it trying to shake people out as hard as it can. So identify, use your fibs, go back through these videos, come over to the BitLab Academy YouTube page, follow us, hit that like button, hit that subscribe, and come in here to playlist. Come down to the was it right here? Daily Alpha, view full playlist. Go through the TradingView guide. It shows you how to use these different tools. Go through these different indicators, signals. We have so much free content here, and make sure no matter what, you come over to bitlabacademy.com. You put in your email here, get information about we're about to launch this new website. We have so much stuff coming with so many new, with some of the graphic. We're waiting on some graphics. That's really the only thing holding up right now that we have to integrate with the videos. But so much stuff is coming. Come and get involved. You can also make sure all the indicators that we talk about, you can find right over here at bitlabacademy.com. Come to indicators, and you can get access to the trading stack right here. And that also gives you access to the BitLab Academy Discord, especially a special section there with all kind of different content, trading content, videos. And we're actually coming out. We're currently working on it with some really great updates to the BitLab trading stack, which for those of you, if you didn't know what I'm talking about, it's this basically indicator that allows us to read all the different, a bunch of different divergences and basically high pivots, low pivots, EMA ribbons, as well as a hidden volume, as you can see here. The relative extrema showing the health of a movement within a trend, identifying trend, local trend cycle top, likely reversal points, local trend cycle bottom, reversal points. There's so much stuff here within the BitLab trading stack, and a lot of we are integrating some of the stuff to be within the price action on the, so it's easier, and some beginner friendly stuff on that as well. So with that, that's all I got for you today. Big love. Make sure that you head over to Hit Network at some point and check out. They do, we have a 24/7 stream there. So make sure you check that out. I'm actually going to redirect to that, which also shows the BitBoy show if you're going there for any of the news. But shout out to all the creators out there: Frankie Candles, Investing Bros, Jason Casper, Traders Reality. Crypto Life, for everybody that's out here doing it on a daily basis, BitBoy Crypto, bringing the news and bringing people together, great entry point for a lot of people. I just want to say thank you, everybody that's here watching. Thank you for being a part of this. Hit that like button, hit that subscribe button, ding that bell on your way out. Make sure that you let crypto, the YouTube know you like crypto. And again, my name is Kellam. Thank you for being here. I will see you all in another point. I'll see you very soon. I'm sure of it. Adios, muchachos. Thank you for coming. Hit that like button and come again. Adios, muchachos. Thank you for coming. Subscribe and be all of our friend. See you later, suckers.